Assalamualaikum and welcome back to my channel. We are now continuing with our second video on the preparation of statement of cash flow using direct method. In my first video, you can check it out. I put the link of my first video relating to this question in my description below, right? So now we are going to do our step 5, which is we are going to perform adjustment to derive cash flow from operating activities. And to perform adjustment here is to look at the remaining asset and liabilities or any income and expenses that we have not yet reviewed, and we're going to do that. After that, we are going to adjust out the non-cash transaction and non-operating item with cash effect, if any, in that operating activities. Remember, we're in our video that I have already published before this, that we have already discussed on cash flow from financing activities, cash flow from investing activities, and also the cash and cash equivalent schedule. So to do that, what we do is we are now left with our few accounts that we have in our statement of financial position. Yeah, we can see that we still have a few accounts not being checked or not being ticked, and you can see we have this here. And the reason is that because this relates to the cash flow from operating activities that we have not yet finished doing that, right? So we're trying to find out this item that you have in this cash flow from operating activities section, which is section 1, the last section that I am discussing, because I go bottom up, as I said. So I'm going to find out the first item, and that is done as working 7, which is cash receipt from customer. Okay, to recap, cash receipt from customer is related to the cash revenue that you collect from your customer from the sale of goods and your rendering of service in the ordinary course of business. It can also relate to royalties, commission, and other revenue, which are your in the course of your ordinary business, right? So let's look at that. And the second one is cash payments to supplier, where you are going to look at what are the payment that you made during the year for the goods that you purchase and the services that you have taken from your supplier in the ordinary course of business, and you're going to track that, how much is the amount that you paid to your supplier. And the last one is the cash payments to your employees and other operating expenses. That is where you will have a lot of adjustment, maybe for your non-cash and non-operating items, the part in the cash payments to employees and other operating expenses. You can also split the cash payment to employees in one row and cash payments to other operating expenses in another row. That's okay, yeah, because cash flow here is to look at how much is the cash payments, and you can be as detailed as that. And the last one is to calculate what is the income tax paid to the Indian Revenue Board in your country, perhaps, and the interest costs paid, right? So let's do that so that we can generate our total Y, because we have already generated U, S, and we want to check whether our Y will match with Y plus U plus S, which comes from this statement of cash and cash equivalent, or the schedule. So let's look at that and do it together. Right. Okay, what you're going to do now is, okay, I'm going to make this for you. We are going to look at our column here. So first, what you need to do is, we are now checking your account receivable. So I start off with account receivable. So I'm going to check that. So I'm going to perform check on that. First, what you do is you need to go and find out what is the cash receipts from customer and cash payments to supplier. That one will make use of this account, accounts payable. Okay. And it will also make use of the inventories. So let's see, I have already put the balances of these three accounts to the correct side in my working. So let's see what I've done for you. I start off with the first item, which is my cash receipt from customer. To find this, what you need to do is you need to open up your T account. So just zoom for you so that it will be clearer. And you need to do few steps here. So I've already shared the steps next to my working here. You can see here. So this is by reconstructing the account receivable. Why? We need to find the amount received from the customer. First, put the balance CD to the credit side, balance BD or the opening balance to the debit side, right? After that, take the credit sales amount that you get from your statement of profit or loss and put to the debit side of your account receivable. So let's just go to statement of profit or loss. I will show you where is it. Yeah, this is your statement of profit or loss. And this is all information relating to our operating activities. So I put purple there. Yeah, this one are also things on operating activities, purple. Right. So we're going to take that, turn over and put there. So I've done that for you. Put to the correct side. Don't put to the wrong side because you will get wrong answer. Right. So you get that. Then the balancing amount is your cash receipt from the customer. If you come across any allowance for impairment of receivables, you may have to do adjustment to your T account as well. All right. So I'm going to put the purple color there. So that was the cash receipt from the customer. So in case there are adjustment for impairment of receivable, that you have make an estimation, and that estimation has to be reflected in the account receivable as well by debiting the correct account, right? And you need to include that in your adjustment if there is any. In our case, none. So now we go to the next one, which is to find out cash payment to supplier. So when you close off the account just now, when you close off the account receivable, you get the balancing figure, right? That balancing figure is cash receipts from the customer. So I put here OA1 and this is working 7. And this will be transferred to the cash receipt from customer section in your cash flow. So it is transferred here. So my first item is this. So that should be an inflow. So you collect from your customer. Now we go to the second one, which is to find out what is your cash paid to your supplier. And we are now actually doing step 5. What is step 5? We are trying to perform adjustment to derive cash flow from operating activities, right? So when you do that, as I said, you need to review thoroughly all remaining accounts. So this is what we are doing. And now we are going to adjust the account to find the cash payments to supplier. So there are ways to do this. First, it is derived from the cash flows that you paid as a result of the purchase that you made to your supplier for goods and services during the current period. So the relevant account that you need to adjust is accounts payable. So I will show you the accounts payable, which is at the bottom here, accounts payable. Yeah, you have to go and adjust that. So you need to go put the balance on the credit side for the opening balance, the debit side for the closing balance. Take the purchase. You have the step here. You can follow the step that I put here. Put the balance, step A1, step A2, put the credit purchase. Here it is available, so you can put it in the credit side of accounts payable. In some question, if it's not available, you need to work out. In my question here, it's actually not available. If it's not available, you need to work out that by constructing your cost of sales account. So my question, I cannot use working A because I do not have my credit purchase. So I can only do working A here, working A, if I have the credit purchase given. So if that is not given, don't worry, you can still work that out. If the purchase amount is not available, you need to reconstruct the cost of sales account, which is given in the SOPL. So if you go to your SOPL, one moment. Okay, this is your statement of profit or loss. You have this item here, this item. Yeah, the item that I will put some kind of shocking pink for you. Yeah, that pink line there, that one is your cost of sale. You can work out using this figure and try to work out that, put that to your cost of sale account, right? And then you are going to use your inventories. So you have your inventories here. Yeah, we're going to check your inventories, as I said. Account receivable we have done. Accounts payable, we have already done the checking, right? Now, inventories. The beginning balance put on the debit side of the cost of sale, the closing balance put on the credit side. And that will give you what you are looking for, which is your purchase. It will not give you the cash receipt from customer yet. So cash payments to supplier yet. So this amount is debited here, so it is credited to the accounts payable, right? This should be only the credit purchase. Let me put a note here. You cannot put any cash purchase here. It should only be a credit purchase. So you have been given cash purchase, do not include that. Just include the credit purchase. If you are not informed, you would simply assume that all purchases are on credit if no information stated otherwise. So your balancing figure here will be what you are looking for, which is your cash payments to the supplier. So that was, I denote as working 8, and this is working 7 for the accounts receivable. So this figure must be transferred to the statement of cash flow. So you transfer that outflow actually. It is not inflow because you spend by crediting your bank account and debiting your accounts payable. This one is an inflow. 242 is an inflow. Why? Because you debit your bank account and you credit your account receivable. That was the total that you debit and credit throughout the year. If you can recall, this is what I did for my working just now to find the so-called, what was it just now? The cash payments to supplier. Right, so I put the balance CD and balance brought down of the inventories account to the correct side of the cost of sale. Yeah, I do that. I then put my cost of sale. Then I close the cost of sale. I get the purchase. When I get the purchase, I transfer the purchase here, right? Right. And when I've transferred the purchase here, the balancing figure, which is on the debit side, since the debit is less than the credit side, so the balancing figure is on the debit side, that will be your balancing figure that will be used, which is to be your cash payments to supplier. So you got that, right? So that was following step in B there, which is OA to B workings, right? I put these short notes so that it's easy for you to do the workings. Now we are looking at the next item, which is in the statement of cash flow that relates to operating activities, which is cash payments to employees and other operating expenses. Okay, what are these? This involves salaries paid to employees, the one that you paid in cash or in check to your employees, and other operating expenses. But operating expenses comprise of distribution and admin costs. So you want to know what is the amount that was paid or was credited to your bank account, the total amount that was credited as an operating expenses throughout the year, your outflow. Same goes for your employee. How much is the salaries that was actually paid? But you need to go and adjust out any, for the salaries, any accrued or prepaid expenses. Yeah, you need to go and adjust that. In case you have any accrued or prepaid, yeah, you need to adjust for that, adjusted with maybe your accruals, and I just add up here prepayments, some details for you. Okay, where do I write that? Oh, never mind. Okay, never mind. I put here again, adjusted with accruals and prepayment. So if there is any expenses that relates to accrued expenses or prepaid expenses that relates to the employee salaries. In our case, we have none. So you need to find that. You need to adjust out for the effect of non-cash transaction for the other operating expenses. So in your case, you can see that in your statement of financial position, if you can go to that statement again, there are no information about accrued salaries, right? No specific information about accrued salaries. If you check your current liability section, you just have information on accrued distribution expenses that I will make use of that. I will check and put that in the account that I have reconstructed. I will also take my prepaid admin expense. Okay, we are almost done actually. And yeah, we're almost done. Then after that, what you need to do is to go and check your statement of profit or loss. So check your statement of profit or loss. If you see here, yeah, you can see that there are some information regarding admin expenses and distribution expenses. Okay, that one. Admin and distribution expenses. If you total up together also with the other operating expenses, this one will made up 77,000. So that 77,000 is made up of these three. This is the amount that you incurred for your operating expenses. So this amount must be transferred here. Transfer this where to? Transfer this to your operating expenses account that you have opened up, or you have already done that here. So let me just show you where is it. Okay. Now, so this is the one that you have put the balance on the credit side. This one is showing all the accrued expenses. We are putting the accrued distribution expense here, beginning, right? And the one here is that I'm putting back the accrued distribution expense closed down, that is being carried down, right? And in the section here, you have earlier, if you check, there was some prepaid admin closing balance, but there were none for the prepaid opening balance, right? There are no prepaid admin, but I still put the brought down figure. So you can see that I put this figure even if there is none, because I want to check this. I put this first. I put this as well. And now what was the thing that I calculated earlier, which is the result of this distribution and admin, 57,000 plus 12,000 plus 8,000 from the statement that I have shown you earlier, which is the statement of profit or loss. Where is it? Yeah, it's there, right? So the total here is 77,000, the total from this 1, 2, 3 item, right? And now we are going to adjust out all the non-cash and non-operating expense, right? So if you look at the steps that I provide here, okay, you can see first you need to reconstruct that. We have done that. We put the balance CD. Okay, we have done that. Put to the correct side. I have done step 2 as well, which is to put the amount given for admin and distribution expenses. If you have a separate salaries account, maybe you can work out that salaries account and put that as well as your working. But here there is none. Everything was put into one account, operating expenses. Maybe the salaries was included already under your admin expenses. Then you need to go and adjust out your non-cash items. So the non-cash item was the one that we have already determined earlier. Remember, you have this non-cash item that was debited to the disposal account, and that was actually credited to the disposal account, and that was actually debited to the profit or loss if you check your income statement just now. And there's one more here, depreciation, that we have also done that was actually debited to the depreciation account, so meaning that that was an expenses, so that's why it is here. And what we are doing is that trying to figure out actually this, we're trying to find this, which is our cash paid in our operating expenses. So I put this, and then now I'm going to I've done everything, almost everything. The income shouldn't be included here, which is the gain on disposal, because that was not included in the expenses. The income, for example, if you check the statement, yeah, the dividend income was disclosed after the operating profit, right? It was disclosed here. And even the gain on disposal was not included in the admin expenses, so you don't have to go adjust out. In case you have included or wrongly included the other income like gain or any other income in the expenses, you need to do some adjustment to adjust out that item. Okay. Next, after you have done that, this one is derived where from? From the SOPL. Now you get your balancing figure, which is the total from the credit side, total credit minus all these balances that you have, right? Minus, this one means nothing. It's just that I want to highlight the item for you. So that was all the prepayments and accrued that you need to go and adjust. Okay, and this is your expenses that you shown in your SOPL. But our target is this, to find how much is the cash that you paid. Okay, you got it now? 50,200. Transfer this where to? Transfer this to the statement of cash flow. Yeah, you transfer it here. Where is it? Here. So this one will have to be the cash paid to employees and other expenses. The next two items that you need to work out is a simple item, which is your income tax. Can either be from deferred tax, but today we're not covering deferred tax. But this one is looking at the operating activities which income tax expense. So we need to look at the income tax expense, and because we want to find how much is our income tax paid. So to do that, put the balance of the tax payable account given in your SOFP. This one, right? The last item that we did. Okay, we have checked all items in our SOFP. We shouldn't be worried. Here also we have checked all this, right? All this we have checked. Copy, I paste all up till here. We have checked this dividend just now, right? We knew that we don't have to adjust that because this is operating activities. Now we are looking at tax. So tax expense was 10,000. Put that figure. Yeah, you can put the figure where? Put in the income tax payable, and you now will be getting your tax paid, or the income tax paid. You may also need to adjust to calculate the income tax paid. Sometimes there will also be tax recoverable. So sometimes you may have some tax recoverable. But in our case here is that we have tax payable, meaning that what we assessed was not enough. Now we have to pay more to our for our tax. But tax recoverable is where maybe you have assessed higher and you can recover that amount from the authority. But that was not in this question. So the actual outflow of cash paid for the tax is this amount, yeah, which is the one that you will show under your operating activities. I will show that later. Let me just finish off with this. Right, the next item is interest payable. Okay, for interest payable, or sometimes you may have finance costs, maybe the things like dividend or renewal preference shares. These are also finance costs. Normally it is incurred, we are looking at the amount incurred in the current accounting period, but a part of this amount are unpaid. But our focus here is looking at what are the amount that relates to the interest paid. We want to know how much is the interest paid. So we need to adjust the interest expense with the accrued expenses. So here there are no accrued interest expense because from our statement of financial position here, there were no information on interest expenses or interest payable. Interest expense is here, right? So that has also another thing that you need to go and do is to transfer that back to the interest payable account. So this is the one which is your expenses. And now you are looking at how much is your interest payable. And your interest paid is 2,600. In case you have your different figure here, yeah, maybe you have supple, but you have some balance at the beginning for the accrued expenses, balance at the end as well. Go and adjust that first. But for today, this is the figure, and this two figure, yeah, will be transferred to the statement of cash flow, and that will be after cash generated from operation. Okay. So these are the things. So you have to put the total correctly. Okay, so you are now, you get your cash generated from operation. So why generated? Because it is an inflow. So inflow, so we delete the word from use there, right? So I put that in here. You also have net cash, which is also an inflow, right? You can just total up that. How do we get that? Where you take 110 here, 400, 400, minus the income tax because it was an outflow. Remember, we credit our bank and we debit our tax payable. And remember this one, we debit our interest payable and we credit our bank, right? So that was the total that you credit throughout the year. That was telling us that these are the things that we credit throughout the year, right? Income relating to income tax. These are the actual paid tax that we paid. These are the actual interest that we incurred and finance costs that incurred regarding whatever activities or finance that we have taken, the source of finance. So this is the net cash from operating activities, 100,000. You have your total Y here. Y, your total Y. Your total U, YU, which is from the second section, total Y, I'm just simply put that, Y, section 1, total U, section 2, total S, section 3. And if you do the calculation, or you do your auto sum here, you will see that, right? Sorry. You will get 11,600. And this figure must be the same, the one that you generate from adding Y, U, and S, which gives you Y plus U plus S, right? Should be the same as compared to the one that you have, or should be reconciled with your increase in cash and cash equivalent. If let's say your total from your 3 activities downwards, from operating, investing, and financing, does not match with this, something is wrong somewhere. Where maybe somewhere in financing, somewhere in operating, or somewhere investing. With that, I'm done with the statement of cash flow using the direct method. I will use the same example to show you the presentation and preparation of cash flow using the indirect method, where I will just work out the cash flow from operating activities under the indirect method in my next video. For my cash flow from investing activities and cash flow from financing activities, it will be exactly the same, even if under the indirect method. So with that, we were doing actually the next checking, which is step 6. Yeah, you can also skip the step, but I would always suggest this to be done, where you need to recheck and be sure to transfer all the relevant amount that you have finalized in the T accounts. Remember the T accounts that we reconstructed, and also those net changes in the items in the soft P, yeah, that you have in your soft P, to the correct activities, correct section in your statement of cash flow template. If you do not do it properly, you might transfer it to the correct amount, but to the wrong section, or to the correct amount maybe to the section which are not allowed by by the standard. There are some section where you can put it, for example, the dividends, right? Dividend received, you can also put under operating activities. But in my case, I put under investing. That is fine if you do it. But today, you need to be sure that you put, or you transfer to the according to what the standards prescribe, whatever allowed by the standard. So then go and reconcile that. We have done that. With that, I thank you for watching. I hope you have a nice experience learning cash flow with me. And I will see you when I will see you with my next video, which is on indirect method. Thank you for watching. Always follow the steps. And if you cannot get it, go back and review. And always keep practicing. Accounting is about practice, and you can only be skillful through enough practice. With that, I thank you for watching. Yeah, and this is a full answer of it, just for you to go through. Okay, and these are the details that I have provided for you. Of course, I have my some of my account that I've already put them in my secret rendezvous column there, right? Okay, with that, I thank you. I'll see you, and I will see you. I'll see you in my next video. Assalamualaikum warahmatullah, and catch me later. Bye.